The rupee opened at an all-time low of 68.89 against the dollar this morning, slipping a further 28 paise against the previous close of 68.61. It then breached the 69 to a dollar mark, hitting the all-time low for the first time. This was after the rupee closed at a 19-month low on Wednesday, posting the biggest single session fall, plunging 37 paise. Meanwhile, global investors have raised their short positions in Asian currencies over the past month, with bets on the Chinese yuan turning bearish for the first time in over a year as China-US trade tensions intensified. The demand for the Japanese yen has firmed. U.S. debt yields have edged higher, underpinned by the U.S. Federal Reserve's upward path for its benchmark interest rate, with a further 2 hikes likely this year. This has kept the dollar supported against a basket of 6 major currencies. With trade tensions between the world's 2 largest economies escalating, short bets on the yuan are at their highest since November 2016. Many regional central banks have tightened liquidity by raising rates in order to shore up their respective currencies, stem capital flight and tackle inflation. And Daniel Lacol, chief economist, joins me from London. Good evening, Daniel. What might be the long and the short-term impact of all of this on the Indian economy in particular? But Daniel, if you can hear me, I meant to ask you, what are the long-term and short-term impacts of this on the Indian economy?
Hello?
Yes, Daniel, can you hear me?
Yes, I can hear you. Sorry. What are the long-term impacts? What I think basically is that the Indian economy is so far quite shielded, but I think that what is important is that I think we have talked a few times about the risks of entering into large fiscal and trade deficits. And obviously the currency can suffer quite dramatically when that happens and the dollar turns. So I don't think that we need to see necessarily the sign of a very big risk long term and in the midterm, but what we definitely need to pay a lot more attention is to this risk that countries tend to get into, which is the one of increasing imbalances because rates are low in the United States and because the dollar remains relatively weak, because it can turn abruptly.
And also, Daniel, it comes on the back of the crude prices going up, the rupee falling, and the trade tensions between India and the US and so on. So these are troubled times indeed for the Indian government. But how likely is it that the rupee might fall further?
It is possible, particularly because what we are seeing right now is the beginning of the process of outflows from emerging market currencies and into developed market, particularly the US dollar and US Treasury. So it could fall a little bit further. But if you look at the Indian rupee, for example, relative to other currencies, the ruble, the Brazil real, it is not doing that badly relative to the dollar. So that shows the strength of the Indian economy. It's one of the very few economies that continue to see upgrades in estimates from consensus, while most of the emerging, also developed economies are seeing downgrades in growth. And therefore, I think that, yes, it can fall further, but not in a way that compromises the strength of the economy, at least in the short to medium term, and definitely not comparable in any shape or form to what is happening with, for example, Brazil, Russia, Argentina, or Turkey.
Right, on that note, Daniel, thank you so much for joining me from London. Appreciate it.